Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to rip through a bunch of different ratios. I haven't looked at ratios in a while, so we can go over it together. I'll make my comments as we go, and it will be an asset versus an asset, and we compare it to history. Generally, what that tells us is if the asset is cheap. It takes the dollar denomination out of it, and then we can price all these different assets against assets, which is a ratio. And that's how we determine if something's cheap or expensive compared to history. You do that with basically anything. You have to make sure that your unit of measure is consistent. For instance, if you're going to compare the value of green beans, you usually price it in dollars per ounce, and then you compare on a dollars per ounce basis at a specific time and compare it across the board, and that's how you can tell relative value. And that's exactly what I'm doing. I'm looking at relative value of what's cheap versus another asset. And it also tells us a little bit about the market conditions we're in. If some assets outperform other assets, it says that we're in this type of market condition. And I'll make comments as we go with the market conditions as well as we go through this. So let's dive in here. Let's take a look and see how these things are behaving against each other. The first one I have is platinum versus gold. So platinum futures versus gold futures. Big picture view, you can see that we were in a kind of a sideways motion here. We broke out. We were at a higher level here, and then we went and came all the way back down. So right now, currently, we have a ratio of 0.4, which is actually, platinum is very cheap in compared to history. This is probably one of the cheapest times it's ever been. All-time low for platinum against gold. You can also see that we've got a Batman top. Basically, there's your Batman in the ratio. That looks pretty obvious too. Last bull market was from basically 1998, 99, all the way till 2008. And that's what the ratio did for platinum last bull market. And I do think it has a lot to do with the value of the dollar and interest rates. The value of the dollar, the DXY, has been relatively strong. It's held up. Interest rates have moved higher, and platinum has pulled back against gold. And it's at a very cheap ratio, and we have not broken out yet of the downtrend line, signaling that stocks are still outperforming in the market because when gold outperforms platinum, generally stocks do very well. When platinum outperforms gold, they generally pull back. Platinum versus palladium, we've seen a move higher in platinum outperforming palladium, and we are at a ratio of about 1, a 1-to-1 ratio, and that's coming from a low of 0.3, which is actually a pretty big move when looking at how many ounces you added to your portfolio owning platinum versus owning palladium. Big moves, you can see last bull market from '01, we had a big move in platinum all the way to a peak, and then we have the move lower, and I think this is probably the bottom here. And we've been moving off that bottom. So I think platinum will outperform palladium, and platinum's at a very low level versus palladium. Platinum versus silver. I know a lot of people love silver. They think silver is going to go to the moon. This is suggesting here that platinum is cheap to silver. And if platinum does outperform silver, and I don't know if that will be the case, but if it does, we have huge upside in platinum. We've broken out of the downtrend. We're at a very cheap ratio, about 39.6 to 1 ounce. So 1 ounce platinum can buy only 39 ounces of silver. And if this were to go back to all-time highs, it's about 150. That would go from 40 up to 150. Pretty big move, a little over 3x, if it were to do that. Gold versus silver, still cheap for silver. We're at about 90. So 1 ounce gold, 90 ounces of silver. and we've been just drifting slightly higher in the ratio over time. So silver's cheap. And if platinum's cheap to silver and silver's cheap to gold, platinum is very cheap. We've got palladium versus silver, another one where you've got your buy palladium zone way down here. And right now we have our buy silver zone, which is up at the tops here. And we've been working our way lower where silver's been outperforming palladium. And we haven't quite gotten into the buy palladium zone yet. I don't know if we'll get there completely, but we are, it looks like, trying to bottom out here where palladium could be bottoming out against silver. Dow Jones versus gold, we're in a gigantic squeeze formation. Could we break to the upside where Dow Jones outperforms gold? Possible. It is possible. But I don't think it will be long living. I think it'll go up and then reverse lower. But Dow Jones versus gold, it is squeezing up at the moment inside of this pattern. And a lot of people think that gold's going to outperform the Dow Jones. And I'm in that camp as well. But maybe we've got one breakout upward move before heading lower. We'll see. Gold versus Dow Jones. So I flipped them. And we're at a double bottom. So here's your double bottom here that we've got. We were breaking out here earlier. And it looks like we've pulled back a little bit. Not really a big deal. It's small little red candlesticks, but we were up against resistance here. And it looks like we're kind of squeezing in this corner here. We'll get a potential breakout at some point. Gold versus crude oil, we're at 28.4, which is cheap for oil. Oil, anything around 30 is basically a steal in the price of oil. And here we are, we've broken out of this uptrend line, and then we're coming back up. I'm surprised that this hasn't broken lower. With war, geopolitical tensions, I would expect this to really ramp lower, but it's been surprising that we're up at 28.4 with all the geopolitical tension, but it's cheap for crude oil. This is going to be crude oil versus natural gas. Natural gas is absolutely cheap. It's been cheap since, I'd say, about 2009. We've been riding a cheap wave of natural gas. But right now we're at 34, we're about 35. Doesn't mean it can't get cheaper. Crude oil could go up while natural gas remains cheap for a while, but we're at very low levels for this ratio where natural gas is really cheap. Crude oil versus gold, we have a outperformance of crude oil during this period and underperformance during this period. We've broken out of the pattern here, and I think we're going to move higher eventually, where crude oil is going to outperform gold for a period of time. But right now, we've been moving sideways in this ratio. We've got a lot of selling pressure. I thought we were going to move up with the geopolitical tensions, all that stuff, but no, we came back down and we're holding the line here for crude oil versus gold, and it's cheap crude oil. Crude oil versus Dow Jones looks like a double bottom to me, and we're still putting in that double bottom. It's taken its time. I'll say that. And again, I am very highly surprised that crude oil isn't a lot higher than where it is today, given all of the tensions in the world. Dow Jones versus crude oil, we're flipping it. You can see that it's been moving up in favor of Dow Jones the past few days because crude oil's fallen. But overall, if we take a big picture view, you can see we peaked out here, came down, retest, and then came all the way down into a very big low ratio there. We've cycled back up. We've had a peak. We've cycled back down. We've hit our head. We hit our head again. And I think we're going to come back down with this ratio where crude oil outperforms the Dow Jones. That's my opinion there. And that's based off of where we're at in the expansion phase of real estate and with credit creation and potentially fiscal spending, which is all inflationary, and crude oil generally is sensitive to inflation. We've got Dow Jones versus natural gas. Natural gas is all the way at the peak here. You can see that we're in this like megaphone pattern and we're up at the top here. It makes me think that we're going to see a large reversal down where natural gas will outperform Dow Jones at some point, probably over the summer. That will probably rotate for power burn, but right now it is ultra cheap for natural gas. TLT versus gold. Gold has outperformed basically a flag pattern and then another outperformance. So gold's continuing to outperform bonds. Gold versus TLT, opposite direction. Gold's outperformed bond price. Copper versus gold, we've been moving sideways here, and it's at a pretty low level, and you can see it's been tracking lower, where gold's been outperforming copper over a long period of time. That's why it's slightly angled downward. We've got uranium versus silver. Uranium's, I think, going to basically outperform just about everything. So it is rocketing higher against silver. Uranium's rocketing higher against oil massively. Uranium versus copper, massive outperformance. It's like literally a straight move higher. Uranium versus nat gas, huge breakout here, guys. Huge breakout to the upside there. Uranium's outperforming basically everything. Uranium versus Dow Jones, it's broken to the upside and it's continuing to outperform. Uranium versus platinum, outperformance, huge outperformance there. Uranium versus gold, continuing higher against that. We've got all these U-shaped bottoms, just ripping it. Uranium versus M2 money supply is moving on up, looks fantastic. And uranium versus the S&P 500 continues to move higher. We've got Baltic Dry Index versus gold. Super cheap for the Baltic Dry Index. It is down in no man's land, and it's been there for a while, guys. It's been there since 2010 at a very cheap ratio for Baltic. We've got gold versus the CPI, Consumer Price Index. That looks like we could eventually break to the upside here with an outperformance of gold. That would be a huge move for gold. Looking at natural gas ratios, natural gas against platinum is ultra cheap. It is down in the dumps. We've got natural gas versus gold in the dumps, super cheap. We've got natural gas versus uranium. It's fallen off a cliff. It is down in no man's land, super cheap for natural gas. Natural gas versus crude oil is cheap. We've gone over that. Natural gas versus copper is cheap, way down there. Nat gas versus Dow Jones is cheap. And this looks interesting. We've broken out. It looks like we're doing a retest where maybe we could get a huge outperformance of natural gas at some point. Nat gas versus palladium, super cheap. It's down in no man's land. We've got natural gas versus Baltic, which is also on the cheaper end. So natural gas, I think, is basically probably the cheapest asset versus the other assets at the current time. Crude oil versus silver. These are some ratios I don't normally go over too often, but it looks to me like crude oil is broken out against silver. You've got kind of a downward motion. We've broken outward of that trend line, and we're doing a retest in crude oil. Crude oil is very interesting because it's set up quite well against a lot of different assets at the moment. And I am very surprised that we are down in the low 70s given all of the geopolitical tension. Very interested there. This is crude oil versus SPX, another one that's got a falling wedge broken to the upside. I think we're going to end up going higher for crude oil, basically against all other assets. Crude oil versus gold, that looks fantastic for a move higher for crude oil. Crude oil versus platinum, we've broken out to the upside. We're just sitting on top of things. Crude oil versus palladium, we have a squeeze up, a breakout to the upside, and I think we are going to continue higher in outperformance for crude oil. And then crude oil versus uranium, we're at a very low spot in history, which makes me think that crude oil is going to outperform uranium at some point, but it hasn't turned yet. So looking at all these different ratio charts, what can we come to a conclusion of? I think there's a couple of things that stick out quite well. Natural gas is cheap against everything. Now, just because something's cheap doesn't mean that it has to become better valued over time immediately. It could stay cheap for a while, but natural gas sticks out as being the cheapest asset at this time against all the other assets. Another cheap asset is platinum. Platinum was cheap against gold, it was cheap against silver, and it was cheap against palladium. But again, it can stay cheap for a while. And that one also looks interesting because of how we'll call it an anomaly in how cheap it is compared to all the other assets. It is way cheap and hit drastic lows against other asset classes for a period of time. And we haven't seen it get this low and stay this low in history. This is an anomaly. Another one that looks interesting to me is crude oil. Crude oil looks like it wants to break against all of the other asset classes, and it's cheap against other asset classes. So we've broken a lot of falling wedges with crude to the upside in favor of crude to outperform other asset classes. It hasn't done that yet, and I'm surprised that we're as cheap as we are given the geopolitical tensions in the world. Uranium is basically outperforming everything. So if you've invested in uranium, pat yourself on the back. You have outperformed all those other asset classes, which means you can buy more of those other asset classes, which is exactly what we want to do. That's the exact reason we're looking at this. And uranium, the momentum's to the upside. It has outperformed a lot of other asset classes. Now, the question is, from this point forward, are we going to continue to outperform other asset classes? And it does look a little bit more expensive compared to other asset classes versus history. So, that doesn't mean it's just going to turn around. It could get very expensive. We can continue to outperform in uranium versus other asset classes given the inventory levels. And that's why we look at inventory levels in the situation that's in, the commodity is in. But that's kind of what I see right now. And the other asset classes like copper and stuff, I don't think they're cheap or expensive. I think it's just kind of in the middle. But that's what I've got for today, guys. Give me a thumb up for the content, subscribe to the channel, and we'll catch you guys next. We'll catch you guys next time. This is Finding Value.